Hello viewers, welcome to Forex Flow weekly analysis. Here on the screen you're looking at the daily chart for EURUSD. Before we start, be sure to subscribe to my channel and leave your feedback in the comment section. As for the EURUSD, we were saying last week that there is a gap around 107.75 and we were expecting that to be closed. I was telling traders if you had entered into a sell trade around 110 or below, you could lock your profit and wait for the price to go down. And last week the price was sitting around here and we were expecting the price would go further down to 107.50. It did not reach there, but it did close the gap that was identified earlier on the weekly chart. Like I was saying here, on the weekly there was a gap. I think it was around 2017. So this gap is now closed. As you can see, this was the gap here, and now we have closed it with this weekly candle here. Now this gap is closed, and exactly at the orange line you see this is the area where we were expecting the price to go down, and that was the forecast given in my previous video. And we have seen that the price bounced from here after closing the gap, and now it is heading upward. So let's look at the daily chart and see what's there for us in the coming week. I was saying if the price goes down, you can close your sell trades. If you had entered into a sell trade around 110 or higher, you could close it here. This was the area where you could take your profit. And we were also saying if the price bounced from here, then we'll be looking at this buying opportunity to enter into a long-term buy trade, and the price should head upward. And here on Friday we have seen this strong green candle and the price bounced from here. Now it's heading upward, and we were saying that this would be a very profitable trade. So I hope you were able to take advantage of this setup that was discussed last couple of weeks, and the forecast that was given to enter into a buy trade around this area around 107.75. If you took this buy trade, I think you should be having a good profit in your accounts right now, as this candle here on Friday is a confirmation that the price will go further up in the coming week. However, this pair overall is in downtrend, so we were expecting the price to go up, and at a certain point when these moving averages which are coming downward, when the price hit there, we are expecting to close our buy trades and take profit. So in the coming week, if you see the price is heading downward again, you can look for the sign. If it breaks below this orange line, then certainly you want to close your buy trades. But if it goes further up, you can lock your profit and let the price go up. The expectation is that it will reach initially to 109. It may find some resistance in this area around 109 before heading upward to 109.50 or 110. I don't see it going beyond 110 at this point. There is a very strong resistance there, and there will be huge selling pressure above this orange line around 110. But if the price reaches there around 109, 109.50, that's where you'll be looking forward to close your buy trades, take profit, and look for the sign of price rejection to enter into another sell trade. Here on the weekly chart, you can see that it has made this small hammer here. The price is expected to, it has bounced from this orange line. Now it's heading upward. So we are expecting the price to go up here all the way to 109.50. On the weekly chart, and then we'll reanalyze this pair end of this week for next week, and then we'll see if the price is heading further upward or the price is going to come down and make a W pattern. So I hope you guys were able to take advantage of the forecast that was given. That's for EURUSD. Now here we're looking at USDCAD as forecasted in the previous video. We were saying that the price will be going up and down between these two orange lines around 132 and 133.25, and that's exactly what we have seen. Also, we were saying that the price will be heading downward as the oil price is going up. This pair was going down, and we were saying that the price will get some support around this orange line, and these moving averages are catching up with the price. So that's exactly what we have seen here. If you look at the line chart here, it does not look good for the long-term traders, as we know that the price is heading downward. But in the coming week, we have to see if the price gets support again here around this moving average and this orange line around 132. If it breaks below that, then you can easily take a sell position, and we'll expect the price to head downward to 131.50 with extension to 131. if it bounces from here, then the price should go back up and will be entering into a buy trade. We'll look forward for the price to reach up to here around 133 with extension to 133.50. That's for USDCAD. Here we are looking at pound USD. We were saying that the price was heading downward and it will get some support around this rectangle area. This was a very strong support in the past as well. As you can see here, every time price was coming down here, it gets some support, and that's exactly what we have seen here. The price dipped down to around 128.50 and then it got this green candle on Friday, so now it's heading upward. So I'm going to extend this a little bit further, so in the future this would be your reference. If the price comes down here, we will expect the price to bounce from here. Now for the coming week, we know that the price is now struggling to go up or keep up with this range, which is currently between 129.50 to 132. However, we see that these moving averages are now coming downward. So here the 20-day moving average is crossing downward to 50-day moving average, which is a sign that this pair will be in huge selling pressure in the coming days. If you see the price is not able to break above this level, which is at around 130 in the coming week, then you can take a sell position, and we will expect the price to go down to 128.50 with extension to 128. As you can see, it has made double bottom here, so the expectation is if there is a buying pressure, it should be able to break above this moving average and it can go back up to 132. However, if you see any sign of rejection around this area, around 130, 130.50, then you can take a sell position and the price should be heading downward. That's for pound USD. Now we're looking at Swiss franc. Here we were saying that the price was expected to go up and to reach all the way here to 0.9850, where this orange line is sitting, and that's exactly what you have seen here. It was very accurate forecast, and now after that, if you had closed your buy trades here, then you could expect the price to go downward, and that's exactly what we have seen here on Friday. There is a huge red candle, which is a sign that there is a lot of selling pressure above 98.50 and the price is heading downward now. Now in the coming week, as you can see, the price has gone down. There was a huge selling here on Friday. It has got a little bit bounce from here with this 50-day moving average catching up with it, and we will expect the price to go up a little bit in the coming week, and then it may go down again. So with that, we have the support around 0.9750. If it's not able to sustain that, then this pair can go back here all the way down to this area, which was the previous support around 0.9625 or 0.96. If you see the price makes a bullish movement here and there's a lot of support coming with these moving averages and there's a buying pressure, then this pair will go back up to this level of 0.9850. So it's a little bit tricky at this time. I would say wait for Monday and see the price action before you enter into any buy or sell trade. Here now we're looking at gold. Our forecast was that the price will go up, and that's what we have seen. However, we were saying that around 1600 or 1625 area we'll be looking forward to price rejection, and if there is any sign of exhaustion, then we'll enter into a sell trade. That did not happen. So the other scenario was that if the price goes up, you can extend your profits and let the price go up. If you see the price is sitting around 1643 with RSI is a little above 80. So with that, I think in the coming week, if it goes further up and then you see any sign of rejection, a candle like this with a red candle like this with inverted hammer or something like this, then you can expect the price to go down because the RSI would be around 85 or 90, and if there is a selling pressure there, then this can be a very profitable trade for you guys. Initial target would be around this orange line, which is around 1600. If it breaks below that, then it can come down here to 1580 or 1575. But if you are a buyer around this area, around 1580, and you are holding your position, you can lock your profit, let the price go up. In the coming week, we expect the price to go further up before it makes the retracement backward, and at that point we'll be first looking at the sign of exhaustion or price rejection around 1650 or above around 1675. If the price is rejected around that area, then you can easily take a sell position, and that should be a very profitable trade. Here now we're looking at crude oil. Our forecast was that the price was expected to go up because of this green candle that was formed end of last week, and we were expecting the price to go up. Now here we know that the long term there's abundant supply in the market, and this crude oil price can go further down back to 50, even below. In the coming week we have to look forward to the buying pressure. This wave has not completed yet, so the price reached here around 50, then it got some bounce here with some profit taking happening every day, and this pair is going up. But like I said, this moving average is coming down and price will be rejected from here. That's exactly what we have seen here. This pair has got some volatility now, so we expect the price to go further up. If it's rejected from here again with this 50-day moving average catching up with it, then you can easily take a sell position, and at that point we'll be expecting the price to go down initially to 50. If it breaks above this 50-day moving average, then I would say you can extend your buy trades. And with any news about the production cut from OPEC, then this pair can go back to around $58 or $60 a barrel. But without that kind of news or any commitment from OPEC to cut the production, this pair will go sideways, or if it's rejected from this 50-day moving average, then it can go back to 50. So that's the opportunity there for the trader to look for this price rejection around this area and enter into a sell trade. And then initial target would be around 50. If it breaks below that, then it can head down to 45. With that, I'm going to close. Thank you very much for watching. Be sure to subscribe to my channel and leave your feedback in the comment section.